Most people think Estonia OÜ is a tax hack. That's already outdated. I actually set up an OÜ and tried to run EU business through it. And what I found is this. The structure is still powerful, but only if your business model is correct. In this video, I'll break down what changed in 2025-2026, why most people fail with OÜ, and how to use it as a strategic system, not just a company. Most people think Estonia OÜ is just a tax trick, but in 2025 and 2026, that mindset is outdated. The real question is not whether Estonia is cheap, but whether it is still strategically relevant. In this presentation, I will reframe Estonia OÜ from a simple company structure into a full business operating system. We will analyze what made it powerful, what has changed in the market, and most importantly, who should still use it and who should avoid it. Because today, the barrier is no longer technical. It is strategic. Estonia became globally attractive for three key reasons. First, the tax deferral model. Corporate tax is only triggered when profits are distributed. This allows companies to reinvest earnings without immediate tax pressure. Second, digital governance. You can run the entire company remotely, from incorporation to annual reporting. Third, EU market access. OÜ provides access to VAT systems, payment infrastructure, and legal recognition across Europe. These three elements together created a borderless company model. And this is why Estonia was once considered one of the most entrepreneur-friendly jurisdictions in the world. But the environment has changed significantly. First, tax rates are increasing. Corporate tax rises to 22% in 2025 and 24% in 2026. Second, regulatory pressure is growing. VAT reporting and compliance requirements are becoming more complex across the EU. Third, banking and fintech controls are tightening. Platforms like Wise and Revolut are increasing KYC and AML reviews. Finally, operational risks are rising. Logistics disruptions and platform dependency, especially Amazon, are creating instability. In short, the easy mode is over. The system still works, but it requires much higher discipline. The tax landscape is evolving quickly. By 2026, three major tax categories, corporate income tax, VAT, and personal income tax, are all moving toward 24%. This creates a timing problem. Because Estonia still taxes only distributed profits, when you take money out becomes a strategic decision. For founders, this also affects salary planning and dividend strategy. If you ignore timing, you lose efficiency. But if you plan distributions correctly, you can still optimize your tax exposure. So the key is not avoiding tax, but managing timing. Banking is now the biggest bottleneck. Traditional banks like LHV or SEB increasingly require local presence, such as an office, staff, or physical verification. On the other hand, fintech platforms like Wise or Revolut are easier to access, but less stable. Account reviews, freezes, and sudden restrictions are increasing. This creates a structural risk. If your entire operation depends on a single payment provider, you are exposed. The good news is that new regulations are expected to improve account stability. But in practice, you must design a multi-banking strategy to survive. This is where most people fail. They focus on profit, but ignore cash flow. For example, on Amazon, you may earn revenue today, but receive cash days or weeks later. Meanwhile, inventory, shipping, and customs lock your capital for 90 to 120 days. If your margins are thin, this creates negative operating leverage. You scale, but your cash position worsens. This is what I call the cash flow trap. And this is the main reason why many OÜ setups collapse. Not because of tax, but because of cash cycle mismanagement. Compliance is becoming digital and automated. In 2025, businesses must be able to provide e-invoices upon request. By 2027, e-invoicing becomes mandatory for all B2B transactions in Estonia. At the same time, the EU is simplifying VAT for small businesses under 100,000 euros revenue. This creates two effects. First, compliance becomes easier for small operators. But second, the system becomes stricter and fully traceable. Early adopters who build systems now will operate smoothly. Late adopters will face disruption. So compliance is no longer a cost. It becomes a competitive advantage. Not everyone should use Estonia OÜ. If your business has low margins, this structure will hurt you. For example, traders without pricing power cannot absorb tax increases or logistics cost volatility. Dropshipping and arbitrage models are also highly fragile. They depend heavily on platforms and can disappear overnight. Finally, if you avoid compliance, you will face serious risks, including account freezes and legal exposure. The OÜ rewards discipline, but it punishes shortcuts. On the other hand, OÜ works extremely well for high-leverage business models. For example, digital consultants. They have high margins and minimal physical costs. SaaS businesses and IP holders can use OÜ as a legal structure to scale globally. Cross-border service providers also benefit from EU credibility through VAT ID and IBAN. In these cases, OÜ becomes more than a company. It becomes a revenue structure. When we compare Estonia globally, it is no longer the lowest tax option. For example, Dubai offers lower tax, while Spain and Portugal offer lifestyle benefits. So Estonia is not winning on tax. It is winning on infrastructure. Its strength is digital governance, EU integration, and operational speed. So the decision is not about where tax is lowest. It is about which system fits your business model best. This leads to the key insight. Estonia OÜ is not just a company. It is an operating system. First, it acts as a legal and tax wrapper, separating personal and business assets. Second, it functions as a payment routing layer, connecting global income streams. Third, it provides trust architecture through EU credibility. When you combine these layers, you get a complete infrastructure. And this is the correct way to think about OÜ. To stay viable in 2026, execution is critical. First, update your pricing model before tax and VAT changes impact margins. Second, plan dividend timing to lock in lower tax rates. Third, upgrade your software, especially for e-invoicing compliance. Fourth, diversify banking relationships to reduce operational risk. These are not optional steps. They are survival requirements. Execution discipline is what separates successful setups from expensive mistakes. So is Estonia OÜ still worth it? The answer is yes, but only under specific conditions. If you run a high-margin digital business and you use OÜ as infrastructure, it remains extremely powerful. But if you operate low-margin physical goods with long cash cycles, this structure will not work. So the conclusion is simple. OÜ is no longer a tax hack. It is a premium system for those who understand how to use it.